Welcome to my YouTube channel. Let's discuss ECZ, where we simplify accounts concept and also we post questions in comments, which we're still working on it. And firstly, before I go further into the video, I would like first to apologize for not uploading in the longest of times. I've been receiving text on WhatsApp and the like, people complaining why I haven't been posting. But the reason was that I've been preparing for this 2024 for you guys. I was putting an outline on how we can better our channel, which is Let's Discuss ECZ. So one of the things that we've put into place for our channel and for you, our viewers, is that for section B, starting, this is actually the first video, we'll be posting parts. So for each topic for section B, there will be 3 parts. So if we say partnership will have part 1, part 2, and part 3. And manufacturing will have part 1, part 2, and part 3. Non-profit part 1, part 1, part 3. Just like that for all those questions that come to section B. This will actually help us understand all the concepts that are in the questions that come in section B. And by the end of the day, one will be able to actually work out section B and actually balance the questions that will be found in section B of your question paper. So this is what we'll be doing this year. So after 2 weeks, part 1 or part 2 or part 3 of any topic that comes to section B will be uploaded. So if you haven't subscribed yet to the channel, please do so that when we post these videos that we're talking about in parts, you will be the first one. You will be the first ones to be notified, and you actually be updated as you are in your holiday, as you are at school. Practice makes perfect. So you come here, you see the question, you try it by yourself, and you check out, okay, where did I go wrong, and stuff like that. And if you're stuck, this is why Let's Discuss ECZ is there to actually help us grow. So today we'll be covering part 1 of partnership. What is a partnership account? What we'll be covering here today, part 1 of partnership account. So what comes into your mind when you hear the word partnership? So partnership is simply a business that is run by 2 or more people who have come together, contributing capital, contributing money for the start for that business. And then in that business, when you actually invest into a business, you expect returns, you expect to get something at the end of the day. So the partnership accounts helps us know how much each partner contributed, how much profit the business made, and how much will be located to each partner. And drawings, everything will be included in the partnership account. So first thing first, when we are doing a question with partnership account, we need to understand the terminologies that are involved in partnership account. So in partnership, there ain't much. There are not a lot of confusing words. There is only goodwill. Goodwill will be covered probably in part 3. So watch out for part 3. And then there's also appropriation account, and then there's current account, then profit, trading, and loss account, you know that already, and the balance sheet, you know that already. So the accounts that are new are only the appropriation account and the current account. So these are the only things that will be a bit new if you haven't done partnership accounts before. But if you have and you just want to get more info, then this is a video. We'll drop concepts concerning the same. So our example for part 1 of partnership is coming from 2018 November paper, which is this one, as you can see on the screen. This is the one that we'll actually do. So if you want to try it, you can try it, check it out, then you try to solve by yourself, because practice makes perfect. Then when you find errors or it has failed, you can come to the video, then you can actually know where you made the mistake. So this is where we'll be getting our question from, section B. So this is just section B. So the question is, Pimba and Banji are in a partnership sharing profits and losses in the ratio 2 to 1 respectively. The following ledger account balances were taken from the books of the partnership on 31st December 2018. So these are the balances that were gotten from their ledger. These are the balances that were gotten from the ledger for Banji and Pimba and Banji. So additional information, like I mentioned, mostly additional information will actually determine most of the times. These are what will determine if your accounts will balance or not. So you need to pay particular attention to the adjustments that have been included, which is on the additional information. So we're having stock there, we're having wages and salaries, and that's 1,850 were accrued. So this word here, accrued. So what does it mean when they say accrued? We'll look into that into the video. Then there's also a provision for doubtful debts. 2% of debtors at the 1st December was to be created. So we're also going to look at how we're going to handle this adjustment. Then motor vehicles were to be depreciated by 40% per annum using reducing balance method. So remember, if you haven't looked, we did this, how to deal with depreciation, reducing balance method, and also straight line method. If you haven't watched the video, I'll drop the link below so you can watch the video and come back here and you see how this type of depreciation is actually handled. But we'll also we'll also do it in the video. Then Banji is entitled to a partnership salary of 5,300 per annum. So that's a salary for one partner. Then interest on capital was allowed at 5% per annum. So we're having interest on capital. Then what are we required to do? Now we are in the exam room. What are you required to do? So the partnership trading profit and loss for the year ending 31st December. So we're required to prepare the partnership trading profit and loss for the year 31st December, then the appropriation account, the current accounts, then finally the balance sheet. And then that's where we're going to find out if the things that we've implemented, the principles, this is accounts, if the principles we've implemented will actually work out in our question. Without wasting much of your time, we'll go and we'll start preparing our trading profit and loss. So for the partnership, like we did in manufacturing, it's just the same. There's nothing, don't be confused. It's just like a normal trading profit and loss. Only the adjustments will maybe have an effect on it. But if you know the trading profit and loss for the partnership as well, it's just the same. You're going to prepare a normal trading profit and loss account to calculate your net profit. This is what we want from this account. So here, what do we start with when we are preparing our trading profit and loss account? So we first start with our sales. So our sales was 132,115. This was our sales. Is there any sales returns? So if there's no sales returns, we're going to take it directly to the last column. So I can see this one is we're only having two columns. I'll create a provision for the other column. So just create a provision for the other column because it's not there. It's not there. So just creating a provision for the other column. So hope it's okay. Yeah. So I've created three columns as it is required in the OASIS in the partnership. So sales, we will drop it to the last column because there's no sales returns. So we're going to enter our sales. How much was sales? Last column. So sales was evaluated at 132. I hope this calculator is not disturbing the view. Okay. So this was our sales. So that was our sales. Because there was no sales returns, we send it directly. Then after sales, what do we enter? So after sales, we enter our opening stock, opening inventory. So our opening stock here, it is stock at 1st January 2017. it was valued at 4,800. So we're going to enter our opening stock. So we can simply just move it aside. So we're going to enter our opening stock. We're going to write it on the middle column, just a normal trading profit and loss. So how much was it? So stock was 4,800. Okay, it was 4,800. From there, what are we going to enter? So from our opening stock, we know that we're supposed to enter purchases. So purchases is there carriage inwards. So if there's carriage inwards on purchases, you don't write it on the middle column. You write it in this first column. But for our question, as we can see, this information that we've been given, there is no carriage on purchases. So that means we're going to send it on the middle column. And how much was it? I didn't see the figure. So purchases was 60,600. So we're going to enter purchases here. So we're going to enter our purchases, which was 60,600. Yes. So from there, we are going to add the two. So adding our opening stock plus our purchases. So when we add 4,800 plus 60,600, what are we getting? We're getting 65. So we're going to write it on the middle. So we're getting 65,400. So 65,400, what is the name of this figure that we've calculated? So the name of this figure that we've calculated is total stock. So this is total stock. AV means total stock available. Then from our total stock available, we are going to go down and we're going to say less closing stock. Going to say less closing stock, or less closing inventory. So what was our closing stock? So our closing stock, we're going to find it down here where they said additional information. Stock at 31st December 2017 was valued at 5,050 kwacha. So this is our closing stock. So we're going to enter our closing stock as 5,050 kwacha. So from there, we're going to lessen this. So what are we getting when we subtract? When we remove 5,050. So when we remove 5,050, we're getting 60,350. So this figure, we're going to write it here, which is 60,350. So what is the name of this figure that we found after lessening, after removing closing stock? So this figure is called cost of goods sold. This figure is called cost of goods sold. Then after finding our cost of goods sold, we are going to less for us to find our gross profit. So we're going to say the sales that we had minus that 350. What are we getting? So we're getting 70,800. So our gross profit is 71,800. 71,800. And this name is called gross profit. So it's just the normal trading profit and loss. Don't get confused. Just normal. Appropriation is the one that will be a little bit different, but it's easy. You understand it. So far, if there are any questions, you can can be commenting in the comment section. Feel free. It's an interactive channel where feedback and is accepted. So if there is anything wrong that you've seen, or maybe an explanation that you've missed as we are going on in the video, don't keep it to yourself. You ask, then guidance will be given. So normally when we're preparing the trading profit and loss, after calculating the gross profit, we put our add incomes there. But because our question does not have any income as we can identify there, we don't have any income from these balances that we've gotten. There is no income. So if there is no income, don't worry yourself. There is nothing that you can do. You just continue to less expenses. If there are no incomes, go to less expenses. Don't create your own incomes. No, question do not provide incomes, so you continue to less expenses. Less expenses. So our expenses, yeah, this one came out badly. This line was drawn terribly. I'm not satisfied as well. So we just, this one, you know it to be supposed to be highlighted. You can, so this is actually something which is big, so I'll put it this side so it's differentiated from these others. So less expenses. We're going to look for expenses in the question. So like I always advise, always start from the top, identifying your expenses. So as you go down, you know which expenses are in the question, then actually just come in and wow, you go here, you go there, you might miss others. So make sure you actually go through, starting from the top to the bottom, finding your expenses. And then for each expense that you look, which you find, you go to additional information and find, is there any adjustment concerning this expense that you found? Then if there isn't, you send it directly. But if there is, you have to do some things to that balance. So we're going to start from the top. So rent, rates, and insurance is an expense. Then we're going to go down to our question. Is there any adjustment on rent, rates, and insurance? As we can see from the adjustment, there isn't. So if there isn't, we're just going to enter that rent, rates, and insurance just the way that it is in the trading profit and loss. So here now we're going to say rent, rates, and insurance. Insurance. So rent, rate, and insurance. So there are no adjustment to this figure. We're going to send it straight to the middle column, which is 7,300. So I'm going to enter 7,300 directly on the middle column. So from there, we'll continue identifying more expenses. So from here, purchases, no. So wages and salaries, we know wages and salaries are expenses. So we're going to go down here. Is there any adjustment on wages and salaries? There is an accrued. So even I probably didn't do a video on this one, but a separate video I believe will be done for how to do prepaid and accrued. So this one, what do they mean when they say wages and salaries were accrued? So accrued goes in hand. It's just the same word as owing. When we say you are owing, meaning you have nkongole, ukadina nkongole, where you got your goods from. So how are we going to handle this one? So when you've got nkongole, in the trading profit and loss, we add it to the expenses. But when you paid in advance, which is prepaid or paid in advance as it is, we're going to subtract from the expense figure. I'll repeat that for emphasis. If we are having an accrued or owing, these two words, they are the same. If we're having accrued or owing, to the figure for the expense balance, we are going to add the accrued figure. So meaning 1,850 will be added to the rent, rates, and insurance figure. But if we're having a prepaid or paid in advance, then we're going to subtract from the figure rent, rates, and insurance. I hope that is clear. So how are we going to handle this? So this one, we're going to enter it. So we're going to say wages, wages and salary. So we said we're going to add it. So first, what was the figure for wages and salaries? So the figure was 21,850. So we're going to bring it in the first column here, which is 21,000. Am I right? 21,850. That is the figure. Then we're going to say down here, we're going to say add owing or add accrued. So we're going to say add accrued. So what happens when we say add accrued? We're going to add it here. So how much was the accrued figure? So the accrued figure was 1,850. 1,850. So 1,850 will be added to the rent, rates, and insurance figure. So we're going to say 21,850 plus 1,850. We're getting 23,700. 23,700. So 23,700 is the figure that we're going to indicate down here. 23,700. So that was the figure that the Pimpa and Banji were supposed to pay for wages and salaries. So I was sorry, I was including rent and rates. No, it's wages and salaries. So that is the figure that these guys were supposed to pay for their wages and salaries, including their figure that they were owing. So we're going to continue looking for more expenses in our question. So from there, wages and salaries, we have motor expenses. Then you're going to go down again, confirming, is there any adjustment? If there isn't, like in our case, there isn't. There is only motor vehicles who are to be depreciated. So there isn't for motor expenses. They're different. So for motor expenses, we're going to include it directly. So we're going to say motor expenses. So motor expenses, we're going to include that figure, which was how much was the figure? So the figure for motor expenses was 11,450. So 11,450. So that was the figure, entering it direct because there is no adjustment. What else? So from there, we were from doing this one, motor expenses, then continue. As we can see, there are no more expenses, but there are more expenses. So the more expenses now, they're going to come from the additional information. After scrolling through the ones that we've been given in here that were collected from the ledger books, we found only these expenses, but there are more expenses on the additional information. So on the additional information we're having, this is an expense, a provision for doubtful debts. 2% of debtors at 31st December 2017 was to be created. So what do they mean when they say a provision? So a provision is simply when we're saying, yes, we're having debtors. Debtors, these are people that these are people that owe the business money, meaning Wanankongole Yato as business. They are our customers. They got goods from our business on credit. So they're having our money. But we know in business, circumstances happen, uncertainties happen. So maybe wafunta, they've gone crazy. Maybe they've gone bankrupt. They have no means of retaining the money that they got from the business or the goods that they got from the business. Now they failed to pay. So as a business and principles of accounts, we need to think ahead. So we analyze, then they say, okay, for these our debtors, maybe 2% of our debtors, maybe 2% of the total debtors will be unable to pay. So if they're unable to pay, then the business, the business, because it's a business, there's a buying and selling, so that there has to be continuity, sorry, has to be continuity, and you can't stop. You need to continue buying and selling goods. So for that 2% that you guys have assumed won't be paid, then the business will actually provide it. So that's a provision. So 2% of debtors provision was to be created. So how do we work this one out? So we're going to find 2% of debtors. 2% of debtors. So here we're having accounts receivables. So account receivables are debtors. These are our debtors. Then accounts payable, these are our creditors. So accounts receivable are debtors. So we're going to find 2% of 14,500, which is our total debtors. So we're going to say 2%, 2% of 14,500. 14,500. We're finding 290. So 290 was the provision. So we're just going to enter it in here. So there are some cases which we'll look at maybe in part 2 and part 3 of the same, on how we can handle if there's an increase in provision and if there's a decrease. So watch out for part 2 or part 3 where we'll handle these type of questions. So here, this is a provision for doubtful debts. Provision for doubtful previous is a provision 2%, so that it's clear. Provision 2% for debtors. So how much was that figure? We found it to be 290. So from there, we're going to continue. So in here again, from the additional information, we're going to find here now they're telling us after this one, we're going to motor vehicles was to be depreciated by 40% per annum using reducing balance method. Like I mentioned, we've done a separate video covering depreciation itself, the two types of depreciation that mostly come in section P, and how to handle them. So here we're going to go direct, but if you want more clarity on how to handle this one, the link for this video on where we've handled depreciation on itself, I'll drop it in the description so you can see how we are actually going to handle this type of a situation. So they're telling us using reducing balance method. In other ways, they're telling us to actually calculate this depreciation on the net book value of that fixed asset. So firstly, we're going to go to this fixed asset they have mentioned. So the fixed asset that they have mentioned is motor vehicles. And motor vehicles, where is it? No, sorry, this one is a provision. Motor vehicle at cost was valued at 24,000. Then in the business, as we were using this motor vehicle, accumulated the depreciation of 9,600. So the net book value of an asset is the value that we have after depreciation we've actually removed the depreciation from that figure. Then the value that remains after removing depreciation is the net book value. So this reducing balance method will require us firstly to find the net book value of this fixed asset. Then from that value is where we're going to calculate the 40% of the depreciation for that given year. So what are we going to do? So we're going to say 24,000, which is the cost of this fixed asset, minus the depreciation that this fixed asset has accumulated, which is 9,600. We're getting 14,400. This is the net book value of the fixed asset as 31st December 2017. This is the value. Now from this value now is when we're going to find now this 40% these guys were talking about. 40%. Now, from this value is where we're going to find our 40%. So you can simply say times 40 divided by 100. We're getting 5,760. So this is our depreciation. So if you haven't gotten the concept behind that one, you can watch the video. And if you have questions, you can drop in the comment section. For this part, you can also comment saying, okay, where didn't you understand? Was it clear? Need more emphasis? You can comment in the, you can drop your comment in the section below. So now this is depreciation. So depreciation we're having for motor vehicle. So how much was this figure that we found? So the figure that we found for this particular year is 5,760. That is the depreciation for this given year. So from there, we're simply going to add, because there are normal expenses in the question. So the expenses are done. It's a normal trading profit and loss. So these are the expenses that you encounter in a normal trading profit and loss. So we're going to add these figures. So we're going to start from the top. So we're having 7,300 plus 23,700 plus 11,450 plus 290 plus 5,760. What are we getting? We're getting 48,500. So 48,500 is a figure that we are going to write here, the last column. So we're going to write our 48,500 last column. So after finding this figure, this is, we know this is now our net expenses. So we're going to underline this. Then from there, we're going to subtract the gross profit minus the expenses. So we're going to say 71,800, which is our gross profit, the one that we calculated there, less the total expenses. So our total expenses are actually 48,500. Then what are we finding? So our net profit for this partnership is 23,300. That's the net profit for this business. So we're going to indicate here that figure that we've calculated is actually net profit. So this is the net profit of this business. So this is the net profit for Pimpa, right, and Banji. So this is the net profit. So this is how you find the trading profit and loss of a partnership account. So just like that, then you've found nothing new, simply the concepts that you know, but now just fused into the question. So after calculating this, what is our question telling us? The second question, they're telling us B, the partnership appropriation account. So the partnership appropriation account. So the partnership appropriation account. So that is what we're going to prepare. So what is an appropriation account? So an appropriation account is simply, we can say we're going to get it as appropriate or appropriation. So to appropriate simply means to allocate. You are going to share the money accordingly, because this is account. So there are certain principles that will follow how the partnership is supposed to be, how the appropriation should take place. So before the start of this business, Pimpa and Banji signed the partnership deed. you guys take comments. For a partnership business to actually exist, there has to be a preparation of a partnership deed where agreements for that partnership are put into place. So it's simply what we're going to follow when we're going to appropriate Pimbe and Banji's profit. So what are we going to do in the partnership appropriation account? This net profit that we've calculated, this is the money that this guy's business has actually accumulated. Now, as a business, these guys invested, so they're expecting something at the end of the day. So in the appropriation account is where now we're going to appropriate. We're going to give Pimpe what belongs to Pimpe. We're going to give Banji what belongs to Banji. So give Caesar what belongs to Caesar, I may say. So these people are going to receive what they are supposed to receive in the appropriation account according to the profit that these guys have actually made or accumulated in their business. So from there now we're going to bring we're going to now so we're going to say this is Pimpa and Banji's appropriation account. Say for the ended 31st December, so put DEC 2017. So that's the title. So from this now we're going to appropriate according to the profit that this guy has made. So we're going to go in here now. We're going to say net profit. What is this guy's net profit? So you get the net profit that you found. So if you found even losses, in business we make losses. So a partnership agrees on how much profit and losses each partner is supposed to receive. So if you found a net loss when calculating your net profit, don't worry. Even the net loss itself, you have to share it to the partners. You get this much loss, get this much loss. That's business. So here we're going to say net profit because that's what we found. So net profit. Don't change to suit what is in here. You write what you found. So net profit was 23,300. That was our net profit. Then from there now, we're going to follow. So when calculating when appropriating, we actually follow additional information and also what was agreed upon at the beginning. Even this ratio will handle it. So firstly, we're going to go down here. We're going to say if there was interest on drawings, which I'm not seeing interest on drawings here, so there's no interest on drawings, but there are drawings. These drawings will go in the current account. So I'll show you how to do with them in the current account. But here, because we don't have interest on drawings, we're going to skip that part of interest on drawing. So what we mean by saying interest on drawing, let me just give maybe so there are two ways of actually writing this, what you're seeing here. There's the other way where you treat this one as the debit side and this one as the credit side. So they'll be adding and subtracting. So this is what I want you guys to understand about appropriating the partnership. So when we say interest on drawings, we all know that drawings are simply money that were taken from the business. So in our case, in a partnership business, this will be money that was taken from the business by a partner. Now, if the partner gets money from the business, that partner is supposed to return the money to the business. And then as a business, okay, we want to make profit and we also want to discourage getting money from the business. So we put interest on drawings. That will be handled in a different part. So when we say interest on drawings, so when returning that money that they got from the business, they're supposed to put interest on the money that they got. So now, if they bring interest, that interest is supposed to be added to the profit that they've made. So meaning it's just, we can say it's an add income to the profit that these guys made. So it's continuing. Well, increase it the income, because these guys, they got drama from the business. Then when returning that money they got, they're supposed to return it with interest. So that interest, we're going to add it to here, but we don't have interest on drawings. So I just wanted to, in case you encounter interest on drawings, that's how you go about it. But we don't have interest on drawings, so we're going to go to this one that says interest on capital was allocated at 5%. So, interest on capital, what do they mean when they say interest on capital? These people, when starting this partnership business, they contributed money to the start of this business. So, by the end of the day, these people are supposed to receive something. So, now in a partnership, business, these people are supposed to receive according to how much they invested. This you must note. Not kuti you invested the 10 kwacha, you expect to get the same same interest or the same profit that the guy who invested the 50 kwacha will get. That does not work in a partnership, unless maybe they say, okay, all profits will be shared equally, then we can do that. But if we're not sharing equally, then each partner is supposed to receive the interest on capital according to the capital, or according to the money that each partner had invested. So we're going to go to capital accounts. So in capital accounts, we're having Pimpa had contributed 40,000 to the business, and Banji had contributed 20,000 to the business. And this is telling us interest on capital was allowed at 5% per annum. So meaning 5% is the interest on the investment that these guys had made. So we're firstly going to calculate Banji. So first we're going to say less, going to bring it here, less interest. So we're going to say less interest on capital, capital. Then I'm going to say, I'm going to bring it down here. We're going to indicate being pi. Also, we're going to include Banji. Include Banji there. So, how much did Pimpe contribute? So Pimpe contributed 40,000. So we're going to find how much was the interest? 5%. So the interest was 5%. Yeah. So we're going to say 5%. So say 5%. Something's wrong. Let's say 5%. 5% of 40,000. 40,000 is 2,000. So we're going to put it here because we're going to add even Banjis. So we're going to put it here. Then how much did Banji contribute? Banji contributed 20. So we're going to find. So it's simply just going to say 0. Okay, let's just enter it for the sake. So 5% of 20,000 that Banji contributed, we're getting a 1,000. So we're going to include 1,000 here that Banji also contributed to the business. So his capital accumulated an interest of 1,000. Then again here we're going to say there is this one saying Banji is entitled to a salary. So when you say is entitled to a partnership salary, we're simply meaning, okay, in this business, because we know, looking at commerce, there are different types of partners. There are inactive partners, there are also active partners. So in this business, we can clearly see that Banji was an active partner in the business, or in the profit accumulation of the business. So meaning this person was there in person helping manage the business. So this person was entitled to a salary of 5,300. So we're going to include, so this 5,500 is going to reduce this figure. So as these profits that these guys actually, their capital accumulated, the interest that the capital accumulated is reducing this 23,300. Even the salary is also going to reduce this figure. So we're going to include here, going to say less Banji. There are different ways of actually writing the appropriation, but I feel comfortable with this one. I think it's the easiest and it's easy to actually write up without making errors and mistakes. So 5,300. So 5,300. Then we're going to add. That's all. Going to add. So 1,000 plus 2,000, which is 3,000, plus 5,300, which is 8,300. This 8,300, we're going to put it here. 8,300. 8,300. We're going to put it down there. Then if there was interest on drawings, interest on drawings, but for interest on drawings, we're going to add to this figure. But for interest on capital and salary for a partner, we less from the profit. So we're going to less now. So we're going to say 23,300 minus 8,300. What are we getting? We're getting 15,000. 15,000. So we're going to include here 15,000. So 15,000 is the figure. This is the figure now that these guys are supposed to share now. The profit. Now we've removed these interest on capital, salary. Now this is now the figure, the profit that this guy is supposed to share. So now here, this is where now we're going to say the sharing of the residue, as we say. So this one you can say it remaining profit, or you can say residue. So we're going to say now the sharing of the residue, or you can say sharing of residue. Because that's time. Residue. So sharing of residue. So sharing of residue will be done according to the contribution of each partner, according to the agreement, in the partnership deed. So how did these guys agree they'll be sharing their profit? So here we're seeing that these guys agreed. So the ratio, they said they'll be sharing it 2 to 1. So meaning this 2 is for Pimpa and 1 is for Banji. So you're going to come here and you're going to say Pimpa. Then down here you're going to say Banji. Then these people, they say they'll be sharing the assets in a ratio of 2 to 1. So I'm going to show you how to do ratios. Now you've done this in math. So ratios. So they've said they're sharing this ratio in 2 to 1. So 2 is for Pimpa and 1 is for Banji, as they have mentioned it in the question. So you follow it the way it is. So if they were to start with Banji and Pimpe started a business and the ratios 2 to Shanshan, then you're supposed to swap them. But the way they are, that's the way they are. So 2 is for Pimpe and 1 is for Banji. So this is how you do ratios. So this question will end here. Here I'm just doing demonstration. So they have given us 2 to 1. We've done math. So 2 to 1. When calculating ratios, they've given us ratios 2 to 1. We're going to add these 2, which is giving us a 3, obviously. So this is actually giving us a 3. So the total is 3. Then how are we supposed to work out this now? So we're going to say Pimpe. We're going to do this. We're going to say 2. Let me write it down here. So first thing, you add the ratios, you find the total. Then you're going to say for Pimpe, you're going to say 2 because Pimpe is supposed to receive 2. I'm going to say 2, it should be divided by, or I can do this so that you guys see, divided by the total, which is 3. Then also Banji, will be 1 divided by the total, which is 3. Then times, so we multiply this. So multiply on a computer is this. So multiply by this now that you found the remaining profit, which is 15,000. Even here, it's just the same. So multiplication on a computer is this casta thingy. So, but you know what multiplication is. So 15,000, even here it's supposed to be 15,000. So that's the way it is. So for Pimpe, you're going to do this, finding Pimpe's share of this residue. Then for Banji, you're also going to do 1 over the total, 1 over the total, 3 times the residue. Even Pimpe, 2 over the total times the residue. They are going to find their sharing ratios. So we're going to say, starting with Pimpe, 2 divided by 3 times 15,000. We're getting 10,000. So Pimpe's share of the residue is actually 10,000. Then what about Banji's share? So you're also going to do the same. Going to say 1 over 3 for Banji. 1 over 3 times 15,000. We're getting 5,000. You're going to write it here. 5,000. Then when we add this, supposed to give us the total. Because if you don't find the total, then maybe your working of the ratios was done wrongly. So please, I hope this information has actually helped someone on how to do ratios. So this is how you handle ratios. You do them like this. You find the total, then you're going to put this one divided by the total, then times the residue. Even 1 divided by the total times the residue for each partner. So that's how you do it. But so when you add 5,000 automatically plus 10,000 gives you 15. So meaning the solving of the ratios was done correctly. So if you find different figures top down, meaning you missed it somewhere. So this is the way to go about the appropriation account. So you firstly remove any interest on capital, you add the interest on drawing, you remove the salary. Then after doing that, now that remaining figure or the remaining profit is what the partners will share as their end profit for now manje in the young. After doing this business with you, this is how much I have actually received. So this is how you handle the appropriation account. I hope someone has gotten something at the end of this. So if you have any question, you can drop in the comment section below so that we help each other. We'll be moving together. I don't want to leave anyone behind in this journey that we started doing part 1, part 2, and part 3. Because this is a building block for the next part and the building block for the next part, and we'll be going on so on and so forth. So part 1 should be understood, part 2 just like that. So please make sure that you are following. Any questions, drop them in the comment section. And then if you're having any particular question, let's say you've tried and it has failed to balance, you can actually drop your question on WhatsApp for free. I don't charge. For free, I'll drop the number down there. You can contact me on WhatsApp, then we'll help do the question together for free. Don't you worry. Let's discuss. ECZ is here to help. Understand, we're living in tough times, but we are here to offer free services. So drop a text on WhatsApp if there are any particular questions that you've tried or didn't understand. Now you are feeling shy. You know, some people feel shy to come out. So you're feeling shy to come out here. You can actually drop a message on WhatsApp, then can help you on WhatsApp. So this is how you handle this one. So we continue. Now we're going to prepare the current accounts of Pimpa and Banji. The information that we're going to use, we're going to use the information that was given in the question and also the information that we've calculated in the appropriation account. So the first thing that you need to understand, or the first things that you need to do when preparing the current accounts, is that you need to go and look for the balances, the opening balances for every account. Almost all the time it will have an opening balance, and it will actually show whether it's supposed to go on the debit side or on the credit side. But if it's not indicated where it's supposed to go, you take it directly to the credit side. So we're going to look at the information that was given on Pimpe and Banji for their opening balance for their current accounts. So we're having these balances here. They're telling us current accounts on 1st Jan, which is the opening balance, 2017, Pimpa was having opening balance of 6,300. So this is so in this account we're just going to enter in every information that has to do with Pimpa. So we're going to go now. We're going to say this is an opening balance. They said can indicate the date, so it was the 1st of January 2017. Then here we're going to indicate this was an opening balance, so we can just say balance, and this is balance brought down or brought forward. So brought down. Then how much was it? So like we've seen, it wasn't indicated that this is a debit balance or a credit balance. It just said these are the opening balances. So if it's not indicated, you take it directly to the credit side, then it will surely work out for you. So we're going to record this amount here, 6,300. Then we proceed. From there now, we're going to look at information from the appropriation. But before we go to information in the appropriation, I think there is information on drawings I saw here. So there's drawings. So drawings and interest on drawings should be taken on the debit side. Reason being, this is an equity account. Money was gotten from the business. That's drawings. It can either be money or goods in marital reform. So it was gotten from the business. So if it was gotten from the business, this money is supposed to be returned back. So meaning the business is the one that is receiving, and that person that got the money is supposed to return the money back, which is Pimpe, partner of the same business. So drawings and interest on drawings should be recorded on the debit side. So if we had interest on drawings in our question, we would have brought it on the debit side, but we only have drawings. So we're going to record here, we're going to say drawings. How much were the drawings? So the drawings were worth 6,400. So we're going to record 6,400. Then we proceed now looking at information in the appropriation account. Every information to do with Pimpa. So for information that we're going to get from the appropriation account, we're going to treat it as so. Every let's say transaction that was entered this side, or balance that was entered on the debit side, when we take it to the current account, we're going to bring it to the credit side. That's the part that's actually a principle in accounts which says for every debit entry there must be a corresponding credit entry for accounting to be complete. So this balance here, Pimpa, interest on drawing, was on the debit side. So when you take it in the current account, interest on drawings, I'm going to say interest on drawings, we're going to record this figure on the debit side, on the credit side, sorry. For every debit entry, there must be a corresponding credit entry. So from there, we're also going to get share of residue. So we're going to look at this one. There is also share of residue. This is Banji. So this is Pimpa. Here we have a Pimpa. So we're going to say share of residue, sharing of residue, share of residue, share of residue, share of residue. The share of residue, we're also going to put it on the credit side. The same principle, every debit entry must be a corresponding credit entry. So this is on the debit side. So when we take it to the current account, on the credit side. So we're going to say, how much was it? 10,000. It was a 10,000. Then here now, so this is actually can indicate say 31st December 2017. So it continues even here to be the same. So I'll just put this even here to be the same. Just put this. Then now again even here to be the same. So just put this. Then we're going to say now balance. So the reason you know why we've put up this, or we don't want to write this again, so we've just indicated that the whole transactions that are following were actually on 31st December 2017. Then here again on 31st December 2017, we're going to bring our balance carried down. So we're going to say balance carried down. Balance carried down. So we do our calculations, we find which side between the debit or the credit has the largest amount. Then from that amount, we're going to subtract the less figure. I'm more aware that you guys know this. So we're going to start with the credit side. That's even sure to have a greater figure than the debit side. So it will be 6,300 plus 2,000 plus 10,000. It's giving us 18,300. So we're going to enter 18,300 there, and even this side 18,300. Done. Then 18,300 minus this figure here, which is 6,400, sorry, it's giving us 11,900, which will be here. So 11,900. And we continue. Now we go to Banji. So the same procedure is what we're going to follow that side. So the same procedure is what we're going to follow that side. Now in this case, we don't have the salary for Pimpe. So the only difference will be on entering the salary. So it will be just the same as well. Every debit entry, there is a corresponding credit entry. So we start first with the opening balance. So I won't indicate the date. The dates are just the same as that on top. So I'll just say balance. Just say balance. Just say balance. The balance brought down. Balance brought down. How much was it? How much was the balance brought down? So the balance brought down was current account. This was 6,650. Same, it's not indicated, so I'm going to take it on the credit side. So 6,650. So then from there, we're just going to follow again drawings. Again, drawings. How much was this guy's drawings? So Banji's drawings were 8,150. So this will be on the 8,150. Then we continue. What else? Interest on drawings we don't have. So this wasn't actually supposed to be interest on drawings here. I made a mistake. It's supposed to be interest on capital, not drawings, but interest on capital. So you correct that one. So I know most of you might have seen this, that it was an error. So it's supposed to be interest on capital, not interest on drawings. We're not given interest on drawings. So here we're going to say interest on capital. Interest capital. Interest on capital. So how much was interest on capital? So interest on capital, we'll find it in the appropriation account. Interest on capital Banji was 1,000. So I'm going to enter 1,000. Same procedure, 1,000. Then we proceed. Now here we're going to say the salary for this guy. So how much was it? So we can actually even check it in the appropriation. The salary was 5,300. To enter 5,300. Same procedure, 5,300. Then we're going to enter share of residue. Share of residue. Share of residue. How much was the share of residue for this guy? I think it was a 5,000. So 5,000. We enter it this side as well. 5,000. Then we follow procedure again. We say balance. So the only difference was on the salary. So you are going to say balance carried down. Balance carried down. We do our math here. So doing our math here, we add these 6,550, then plus 1,000, plus 5,300, plus 5,000. We're getting 17,000. We're getting 17,950. So we enter 17,950 there, even there, 17,950. And now we subtract with this figure. We're getting 9,8. Then we're done for them. So you can actually bring the balance brought down for the following, but yeah, so that's how you go about the current accounts. Just that easy. So there is even a format. I know most of you have it. So if you don't have it, you comment say don't have a format on how the current account is actually prepared, where you have X on where drawing is supposed to go, you have X where interest on drawing is supposed to go, you have to my X where interest on capital is supposed to go, share of rate is supposed to go. So if you don't have, just comment in the comment section below, then we'll see what we'll do from there. So this is how you prepare the partnership's current account. Then lastly, now we're going to the balance sheet, the determinant of all our calculations. So here we're going to continue. So we're going to say, let's have our cost here. Normal balance sheet, don't be confused. Then we're going to have depreciation here. Then we're going to have net book value. Net book, put it in capital letters. Net book value. Then we simply just underline. And now we proceed. So you know what we start with in the balance sheet. So it will be a normal balance sheet. The only difference will come last, but at the end there as well we'll have differences. But for the top, just follow same procedure for balance sheet. So we're going to start with fixed asset if we have any. So fixed assets if we have any. So fixed assets, let me even put it there. So there's a difference. The difference. Fixed asset, we have it there. Then we're going to look for fixed asset on the information given. So fixed assets. Do you have any fixed assets? So sales, rent, motor expenses, motor vehicle at cost. So we're having motor vehicles at cost. Those are only fixed assets. Those are only fixed assets. So we're going to enter. Those are only fixed assets. So we're going to enter motor vehicle cost. So down here, going to say motor V. So motor vehicle, how much was the cost of the motor vehicle? So the motor vehicle, on the issue of depreciation, it was saying, what was it saying? So to say motor vehicles was to be depreciated using the decreasing balance method. So first we're just going to get the cost of this motor vehicle. So this is where the tricky part of depreciation comes into play. But as you continue doing these part 1, part 2, and part 3 together, you understand and you actually realize that they're just simple. Once put everything into practice, then it will be easy for you. So motor vehicle at cost was 24,000. We're going to enter 24,000 on cost. 24,000 on cost. Then on the issue of depreciation, we're going to check previous depreciation was this amount. So we enter this amount here on calculator or on your side paper. So this was the amount, the previous depreciation. Now remember, when we're calculating here, because it's reducing balance method. So this is only the tricky part of reducing balance method. You don't just enter things directly. You consider what you've done previously, then you work it out. So motor vehicle, the depreciation that we calculated for this year was this one. This one here was the accumulated. It accumulated over the years that we've had this fixed asset. But for this particular year, 2017, we had this depreciation. So we're going to add this depreciation plus this depreciation to actually calculate the net book value of the fixed asset that year. So we're going to say this depreciation, that was previous depreciation, but the depreciation we calculated, so we're going to say this plus 5760. Total depreciation amounting to 15,360. This is the depreciation we're going to enter here, which is 15,660. Then we subtract from 24 to find the net book value. 4,000 minus 15,360. We're finding 8,000. So 8,640. Then we proceed. Do we have any other fixed asset? So let's make sure. So rent, land and buildings. We almost forgot this one. Was there depreciation on land and buildings? No. So land and building will just go direct because there was no information given about this. So land and building, there is no previous depreciation. There was no depreciation calculated that particular year, 2017. So we're just going to enter lands and buildings here. Say land and buildings. Land and buildings, how much was it? So it was 55 something, 55,300, yeah, 5,300. Then was there any depreciation that year? We don't have any. So if we don't have any, we can just do what I like in accounts here. I like doing this. I feel like an accountant when I do this. So that was the figure. So there was nothing. So we'll bring the same figure this side, 15. Then like so. Then we're going to now calculate the totals. We do the totals. So here it will just come directly on the depreciation part. Total depreciation will be 15,360. Then here we're going to add, so let's add net book value first. This plus this, we're getting that. We're getting that. From there, we'll go this side as well. We're going to say 24,000 plus 55,300. I'm getting 79. Getting 79, 300. 305. Okay, for that we are done. Actually, we wasn't supposed to reach this side. We wasn't supposed to reach, or that side is supposed to be open because we're continuing with this figure. This side we leave it like so. Then we continue to current accounts. Current accounts, normal balance sheet. Don't complicate your life. So normal No more balance sheet. Current assets. So current assets, what current assets do we have? Number one on your charts, before you even look, debtors, debtors. But debtors, remember there was adjustment that was made to the debtors figure. There was an adjustment that related to the debtors figure. This one here said a provision for doubtful debts of 2% of debtors at 31st to be created. So 2% of debtors was disturbed. So how are we going to treat it in the balance sheet? So we already treated it that side where we calculated the 2%. So let me just show you. Here we calculated provision for. So the 2% of our debtors was amounting to this. So this amount actually affected the total debtors figure. So we're going to go here. Firstly, we're going to enter the debtors figure as it was before we made that adjustment. So the debtors figure was amounting, so accounts receivable was amounting to 14,000. So I'm going to enter here 14,500. Let me check. It was amounting to 14,000. Yes, 500. So we're going to say less provision, 2% provision, to be more specific. Less provision. You can even indicate 2%. Actually, you are supposed to indicate so that it's clear. So here it was 290. So we're moving it 290 from there. Bam. Then we subtract 14,500 minus 290. So this figure, I'm going to enter it here, 14,000, like so. Then we continue. What other current asset do we have? So the other current asset that we have stock. Stock was amounting to how much? How much was stock? Closing stock. So closing stock was valued at 5,050 kwacha. Going to bring it directly here. 5,050 kwacha. Then from there we continue. What else do we have? Do we have prepaid, paid in advance? So I doubt if we have prepaid or paid in advance here. We don't have any prepaid, paid in advance. As we can see, we only have accrued. So we go back here, this figure here, this bank figure. This bank figure, we're going to indicate it as well. So we had money in the bank, basically. So we had money in the bank. Money in the bank was amounting to 4,700. So we're going to enter here bank. So bank, how much was it? So bank was 4,700. 4,700. Then that's all for the current assets. We only have 3. So we're going to add these. So guys, these lessons that we're doing, invite your friends. Say, okay, by YouTube, found this cool channel where solve accounts questions together, and this year will be super interesting for you guys that are writing this year. Will be super lucky because we'll do but everything 3 manufacturing 3, partnership 3. So you guys will be helped a lot. So invite your friends, tell them, no, my YouTube channel, let's discuss ECZ. Just search let's discuss ECZ on YouTube, or share the link to the videos, then help people to find out about this channel. And make sure you like, share, and subscribe. The people that wrote last year were actually helped by the same lessons. We testified. A lot of people got distinctions, and they were actually saying, no, because of the things that we did, the manufacturing that we did, it came in the OSCE in the exam. Not exactly, but it was similar. Manufacturing was there in the exam, and people who watched the manufacturing account that we did were helped. They even said we wrote it directly like you taught, and we actually got a distinction. It balanced in the exam, and we actually got a distinction. So even these that we're doing this year, you're writing this year or you're writing next year, you follow these lessons that we're doing, and the only way you can follow is if you subscribe, so that when we drop new content, you are the first ones to be notified, saying, okay, yeah, got video. Pari chan, what question are we solving? then you come, then we move together. Have questions, you can inbox me on WhatsApp, then we go together. We're a family, we need to help each other. Accounts should not be a subject that will cause your points on your final exam to actually increase, but it should be the one that you even count. Say, okay, I got the one in accounts. So let's aim for distinction in accounts. That's why this YouTube channel is here. Subscribe, like, and share. So we continue. So we're going to add these. So I'm having 14,210 plus 5,050 kwacha plus 4,700. Total 9,000. Let's add them again. Let's add again. 14,210 plus 5,050 plus 4,700, giving us 23,960. So I'm going to put here 23,960. And from there, we're going to say current liabilities, short-term liabilities. So current liabilities, liabilities. Current liabilities, we have our creditors. We need to pay back their money, creditors. So how much was the creditors figure? So it was 4,350. We bring it here. 4,350. Then what else? They accrued this money that we talked about here. We said wages and salaries of 1,850 were accrued on December 30th. It's actually 30th, not 31st. December 30th, 2017. So for accrued and owing, it's a current liability. Always remember that, and it's supposed to appear on the current liabilities. I don't know if it's a head or a section, but that's where it's supposed to be. So I'm going to say, so here we actually made a mistake. It's supposed to be here, this figure. This figure is supposed to be down with creditors. 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 Then I'm going to enter salaries and wages. Just enter wages. Wages accrued. Wages accrued. How much was the amount? I think that was somewhere 1,850. Confirmation 1,850. Okay, so this is the figure. So these are only current liabilities. We add them. 4,650, 350 plus 1,5,850. We're getting this figure here. So we put it down here. Going to say 6,200. Then we're going to less, because this is actually less current liabilities. So when we subtract 23,960, we remove 6,200. What are we left with? 17,760. So we're left with 17,760. Hapa is your heart has started racing in the exam or in your mock this year 2024, but you manage. No, if you just follow, you do well in your mock. Then from there, we're going to add the two. Don't subtract. The mistake that I used to make personally, I used to subtract these two, but you don't subtract them, you add them. So we're going to say plus 63,940. What are we getting? Our balancing figure is supposed to be 81,700. So that's our balancing figure. We can even close it from here. So I'll start this in this new on this new page for space here. So I just want it to be in this new page. So in this new page, we're going to start with financed by. What was this guy's business financed by? The guy's business was financed by. This guy's business was financed by. It was financed by capital. Capital that they contributed. These guys, capital. Capital, you can bring it in the middle column. We're going to look at the capital that the two contributed. So the capital that the two contributed was, we're having 40 plus 20. So 40,000 plus 20, which will give us 60,000. So 40,000. So you can actually make it professional as accountants would. So we say capital, we put these, I don't know what you call them in English. Then we say we show the amounts for capital here. Then down, also going to show branch. So we just look professional as accountants. So even when they're marking, like cheesy, right? This person knows what is writing. So you contributed 40,000. That carry from account with a capital. Then this one brought in a 20. So just look neat and look professional in your doing. Don't make your work look scattered, but you look professional. So from there now, going to add the 2, which will give us 60, no need of using a calculator. So here we're going to have a 60,000. Bring it down here. 60,000. Then from there now, we're going to bring now the current accounts, the ones that we calculated. So if you calculated wrong current accounts, but you are gone. Current accounts. So you need to be careful in accounts. So current accounts, we're going to follow again, having Pimpa and also having Banji. So look professional here, Banji. So many of you might be asking, what current accounts do you calculate? So for the current accounts, we go here now. Go back to the current accounts that we saw. So for Pimpa, the current account, we're going to get this balance here. The balance carried down. This was the money this is the figure that was left in this guy's current account. That's the money we're looking for. That's the figure we're looking for. So we're going to get this 11,000. So another secret when you're now down there in the balance sheet is this. When you're having these guys, as you can see, both their balances are being their own what's is debit side as a closing balance. Then when you take it to the balance sheet, you, like the way they are, you're going to subtract from you're going to add, to the figure on top, the capital that you calculated. Then if it was found the closing balance, this was found here, then to the capital, the total capital that you calculated, supposed to subtract. So this is something that you need to keep in mind as you are calculating your current account. So for this one, we're just going to get it 11. Going to get 11. Going to put it here. 11,900. Yes, 11,900. Then Banji. How much was Banji? So Banji. So let me show you what I was talking about. It was 9,800. And it is also on the credit side. So 9,800. Then we're going to add the 2. Add the 2. 11,900 plus 9,800. Getting 21,000. So we're going to put out 21,000 there. So if one was on the credit side and the other one was on the debit side, here where we're going to put this 21, let me just indicate 21,800. 7 subtract. If another balance, this closing balances, one was on the debit, then the other one was on the credit. or both on the credit side, we would have subtracted. But both are on the credit side, we're simply just going to add the two. I hope I'm clear. Going to add the two. So here now we're going to add the two. So adding the two, we're going to say 60,000 plus so 21,700 plus 60,000 plus 60,000, we're getting that figure, the one that actually proves that our calculations were actually accurate. So one like so. Then upper in your exam, Peter ticket, you've actually balanced. So you've seen here, this is the figure that we found. Even here, this is the figure that we found. So in the next video for partnership, so if you're having challenges now with goodwill, so goodwill will be handled in the next either part 2 or part 3. So we're going to handle every aspect of question B that comes in section B of accounts. So make sure you subscribe, you like, and you share, that when we post new content, you are notified directly saying, okay, oh, part 2 has been dropped, or maybe manufacturing part 1 has been dropped, incomplete records, single assist, non-profit making organizations have been dropped. So please watch out for this one. If you're having any questions, you can simply comment your argument, or maybe there's somewhere I made an error. You know, we're human and we're bound to error. Anywhere where I made an error, you can simply comment, then you say, okay, here I really didn't understand, then we'll help each other on that one. Or even if you have personal, you contact me on WhatsApp, the number will be dropped, then we'll be helping each other. So as for this question, we are done. Part 1 for accounts. So part 2, part 3 will come, covering all aspects, all your questions for section B for accounts. So for this one, goodbye. I hope to see you in the next video. It's bye bye for now.